Hello, everybody. This is Kelly Bolin coming to you again from Signature Real Estate, KSA Kelly. I'm a broker associate with the company. I've been a loan broker for 30 years and a real estate broker for just as long. Let me get some of the legal stuff out of the way. My NMLS license number, because I'm going to be talking about finance things, is 1078028. That's my NMLS number. Today I'm going to talk about how loan fees work. These days, it's something that, a real estate agent, a real estate broker, an agent, realtor needs to know a little bit about everything. And that includes how loans work. That includes what their clients are going to pay and how fees are going to be charged. It doesn't mean you have to be an expert in loans, but it means you need to know a little bit of something about loans. I'm going to talk about how just basic loan fees work, because we always, on one hand, we have no-cost loans, and we have fee-based loans. Is there such a thing as a no-cost loan? Well, not really. The DRE doesn't like us to use that term. Basically, a no-cost loan is where the interest rate is high enough so that the yield spread premium or rebate that the broker makes is enough to offset the fees that you would incur on a typical loan. So like points, underwriting fees, escrow title fees, and appraisal, recording fees, things like that. There's an old adage: the higher the interest rate, the lower the fees. The lower the interest rate, the higher the fees. Now, here's how this works. I'm going to use a real simplified example. Let's use $400,000, and this is I'm doing this as of December 19, 2018. So these are just rough numbers, and it's just numbers that I want you to ask your broker or your realtor to calculate for you when you're going to do a transaction. I'm not telling you this is what it is. I'm just saying these are the questions you need to ask. On a $400,000 loan, it could be a purchase loan, it could be a refinance. I'm going to use two different quotes. One quote would be a loan that would be what I would consider a no-cost loan, or a loan where the broker pays all the fees that are associated with the loan. That's at one interest rate. I'm going to call it 4.625 on a $400,000 loan. And then I'm going to use a fee-based loan where there's not enough rebate to cover any of the fees in a loan for $400,000. We're going to call that the par rate, and we're going to use 4.125. That's about, on today's rate sheet, that's about the difference in spread between the two. On a $400,000 loan with no fees, the lender gets enough of a rebate so that he doesn't charge an origination fee or an appraisal. He pays for the escrow title fees at closing, along with the other miscellaneous fees that you might have. On a $400,000 loan, let's see, look at my notes, on a 30-year fixed rate, at 4.625, that's a payment of $2,057 a month. Okay, let's remember that. Now let's look at a loan where the customer is going to pay fees in order to get a lower rate. So today that difference would be about a half point, which is usually about what it is. Today on a $400,000 loan, you could do a loan where you would basically buy the loan at the lowest interest rate. Not necessarily the lowest, you could actually pay a lot more fees and lower it even further, but let's call this the par rate. That would be at 4.125. The difference is about a half point between the lender paid fee loan versus a borrower paid fee loan. Now, remember, it's not a $400,000 loan amount anymore, because you're going to have fees that are going to be added on top of that unless you pay for them out of pocket. Let's just assume you add the fees to the loan. That would be 1.5 points, let's say today at 4 1/8, 4.125, that's $6,000. You'd have other miscellaneous lender fees, underwriting, processing, they all call them different things. That'd be another $900. Escrow title fees to do a refinance or purchase, let's use $1,700 for a conservative figure, and then maybe $1,000 for miscellaneous county recording, document fees, type of thing. That's probably about right. So it's going to cost about $9,600 on a $400,000 loan. And if you've done any loan in the last 5 or 6 years, is that an unreasonable number? I don't think so. So you're going to do a $409,600 loan at 4.125 versus a $400,000 loan at 4.625. At 4.125 on the higher loan amount, your payment is $1,985. That's a $72 a month savings. But what does it cost to get that savings? Well, it costs you $9,600. $9,600 divided by that monthly savings, according to my math, is about 11.1 years. So it's going to take 11.1 years to just recoup those costs based on your monthly saving. Now, is that a good idea? Well, if you're into it long term and you look at it as a 30-year mortgage, yeah, probably will. You'll save a tremendous amount of interest over the long term. But how many people stay in a house for that amount of time, or go without refinancing it at least once or twice? So I'm not telling you which is the right way or the wrong way. I'm just telling you these are the questions you need to ask your lender. What is your break-even point if you choose to do a loan that has no fees versus a loan that has fees? Yes, you get a lower payment, you know, and yes, you're going to pay for it. That's the question, I think, when you're doing a loan and you're approaching finance. Ask the lender what the two options are. What is the loan if I buy down the loan so that I get the lowest rate, versus what is the loan rate where you would use the loan broker or bank, pay the fees, and then compare the two. What's the break-even point? And then you make the decision. Does it make sense or does it not make sense? If you're going to be in the long-term guaranteed, go with the fee-based loan. If you think you're like most people and you're going to probably refinance or move within 5 or 6 years, I don't think I'd do the fee-based loan. I'd take the slightly higher payment, and have no reduction in my equity as a result of doing that loan. Also remember, the interest is a tax write-off. So even though you have a $72 a month higher payment, that's a tax write-off. So is it really $72 a month? Not necessarily. So I hope that helps you with basics about loan fees. I hope you can ask. I'm not telling you which is better, which is right or wrong. I'm just telling you to ask your lender and your real estate professional which way you think they should go. Know what the facts are before you make a decision, okay? Have a great day. I hope that helps.